This is an interesting question. If I'd put $1,000 in Magellan on the day you took over, how much would I have reaped on the day you retired? And he says, if you put in $1,000 on the start, it would have been 28,000 13 years later. So that's 2,700% return on your investment, which is mighty solid, I would say. They go on to say, talk about the change in 86 and 87. So this was an interesting question because I was like a baby when this happened. But they go on to talk. He goes on to talk about how rough the market was at that time, and there's actually a lot of parallels, or a few parallels, with what we might be going through soon here, too. Talk about the change in 86 and 87. Well, I remember in my career, you'd say to somebody, you worked in the investment business, like you're at a party. Yeah, I work in investing. And they'd say, that's interesting. Do you sail? Like, what do you think of the Celtics? I mean, it would just go right on to the next subject. Like, they didn't give a crap. Nobody cared. They would have some interest in that subject. But if you said you were in investment business, they said, oh, terrific. Do your children go to school? It was just right. It was just right to the next subject. You could have been a leper, and been much more interesting. So that was sort of the attitude in the 60s and the 70s. Like, zero people cared about investing at that time, which is fascinating. As the market started to heat up, you'd say you were an investor. Oh, that's interesting. Are there any stocks you're buying? And people would listen, not avidly. They'd think about it. But then as the 80s piled on, they started writing things down. So I remember people would really take an interest if you were in the investment business saying, what do you like? And then it turned, and I remember the final page of the chapter would be, you'd be at a party and everybody would be talking about stocks. And then people would recommend stocks to me. And then I remember not only that, but the stocks would go up. I look in the paper and I noticed they'd go up in the next 3 months. And then you've done the full cycle of the speculative cycle, that people hate stocks, they despise, they don't want to hear anything about them. Now they're buying everything and cab drivers are recommending stocks. So that was the sort of cycle I remember going through from the 60s to the 70s all the way up to 87, which is fascinating because they say when your taxi driver starts to recommend stocks to you or starts to recommend investments to you, it's probably time to start backing out. And I feel like that is kind of happening now, especially with crypto. What do you guys think? I'm interested to hear your thoughts on that. I know a lot of you guys are newer investors, but that's something I started to see even last year, I think, even leading up to kind of the Corona crash in March. And I was kind of like, why does it feel so over hot right now? And I like pulled back massively and just took profit massively. And then when things fell apart, I was able to, pour into a bunch of different stocks that I like. Going on to 1980 or continuing on to 1987, where were you when the crash of 1987 came? Well, I was very well prepared for the crash in 1987. My wife and I took our first vacation in 8 years, and we left on Thursday in October. And I think that day the market went down 55 points, and we went to Ireland, the first trip we'd ever been there. And then on Friday, because of the time difference, we'd almost completed the day, and I called and the market was down 115 points. I said to Carolyn, if the market goes down on Monday, we'd better go home. And we're already here for the weekend, so we'll spend the weekend. So it went down 508 on Monday, so I went home. So in 2 business days, I had lost a third of my fund. So I figured at that rate, the week could have been a rough week. So I went home. Like I could do something about it. I mean, it's like, he's saying that sarcastically, like I could do something about it. I mean, it's like, if there was something I could do. I mean, there I was, but I think if people called up and said, what's Lynch doing? And they said, well, he's on the 8th hole, and he's got every par so far, but he's in a trap. This could be a triple bogey. I mean, I think that's not what they wanted to hear. I think they wanted to hear I'd been there looking over everything. I mean, there's not a lot you can do when the market's in a cascade, but I got home as quickly as I could. That's one of the tricky things about managing a fund is that people are going to call you up and be like, what's happening with my money? What are you doing with my investments while everything's falling apart? That's your job kind of thing. Whereas for us individuals, we don't have to deal with that. So that's pretty nice. Have you guys been through a market crash before? And if you have been, how did you handle it? Did you just sit back and watch? Did you sell everything? What did you do? Why did the crash of 1987 happen? Well, I think people had not analyzed 87 very well. I think you really have to put it in perspective. 1982, the market's at 777. It's all the way to 86. It stayed like that. You have to move to 1700. Huh? You have to move to 1700. In 4 years, the market moves from 777 to 1700 in 4 years. Okay. So it wasn't flat, it went up. Then in 9 months, it puts on another 1,000 points. So it puts 1,000 points on in 4 years, and then in the next 9 months, it puts on another 1,000. So in August of 1987, it's 2,700. It's gone up 1,000 points in 9 months. Then it falls 1,000 points in 2 months. 500 points the last day. So if the market got sideways at 1,700, no one would have worried. But it went up 1,000 in 9 or 10 months, and then down 1,000 in 2 months, and half of it in 1 day. You would have said the world's over. It was the same price. So it really was a question of the market just kept going up, and it just went to such an incredible high price by historic price earnings multiple load, dividend yields, and all the other statistics. But people forget that basically it was unchanged in 12 months. If you looked at September of 86 to October 87, the market was unchanged. It had 1,000 point up and 1,000 points down, and they only remember the down. They thought, oh my goodness, this is the crash. It's all over. It's going to go to 200 and we're going to be selling apples and pencils, but it wasn't. It was a very unique phenomenon because companies were doing just fine. Just, we call up a company and say, we can't figure it out. We're doing well. Our orders are good. Our balance sheet's good. We just announced we're going to buy some of our stock. We can't figure out why it's going down so much. So unlike what we've had over the last year, in 87, the only reason for this huge crash was because it got too hot. There was no reason for it to be that high. So really, it should have just gone sideways for a year. But because people were doing crazy stuff, it pumped and then it dumped, which is fascinating, And I feel like we see more of that today. And even if you zoom in on stocks like AMC last week, it's like minute by minute doing that rather than over a year or something like that.